Hey, Scott. Hey, Steve. How's it
Hello.
going?
Yeah, I can hear you.
Good. Happy Monday.
Nice.
I feel like I've been on a long voyage, and from the looks of the trading action today, I think the market is kind of feeling like, just about everybody else that sat in front of the monitors today and tried to push some buttons and get some good trades. Christmas followed up by New Year's and the abbreviated weeks, and today marks the first full week back in the saddle. And we had a little bit of a lazy day, didn't we, Steve?
Yeah, we can call it a lazy day. We'll call it an inside day as we look at the markets. But yeah, I'm right there with you.
All right. Hey, but before we get too far down the rabbit hole here, let me take care of the legal stuff. Just want to make sure everybody out there is aware that we are publishers of information. So everything we share with you today and any other webinar, strictly for educational purposes. Now, you might need the services of a registered investment advisor or a Series 7 broker, so if you do need that type of advice, please seek out the appropriate individual, which is pretty easy to do with the magic Google machine. So once again, everything we share with you is for educational purposes, so I think the lawyers will be happy with that. All right, before we get on to the itinerary, just for those of you who are regulars, bear with us for just 1 second. This is mainly targeted for the people that might be joining us for the first time today, and just want to take the opportunity to let those people know that not only do we have today's webinar, but we have them on Tuesday, Wednesday, and Thursday as well. We do give you Friday off, but we cover a lot of different content, everything from how to interact with Holly, our AI module, to just about everything under the sun when it comes to trading. Of course, myself and Steve Gomez host on Mondays. Steve typically has Tuesdays, and he's got Andy riding shotgun with him. We've got Brad and Dan on Wednesdays for the Q&A webinar, and we wrap it up with Thursdays. Andy's trading studio, and I ride shotgun with Andy.
Perfect mashup.
Right. Quite a nice little mashup. Different personalities putting their thoughts out there for everybody to absorb. And then, of course, if you haven't done so already, we've got a great trading room. Over 500 people joining Barry's trading room on any given day. So between the webinars and the trading room, we fostered quite a nice little community around the award-winning technology. So it's there for you guys, so enjoy, take advantage of everything, and that's that. Well, Mr. Steve, as we like to start off with what the overall market did, how about I just flip it over to you?
Okay. Why not? Definitely some stuff to look at. Let me grab my screen here. All right, you all should be seeing the SPY, big full version of it. These lines all certainly make sense back in the history of the SPYs. This was our, first level of pivot, which we moved through before the election. Second level, we broke out. This level right here, obviously, was the highs befores, and the S&Ps took that out. Spoke last week about a bit of a break through this, but we've managed to move higher again. I'm going to leave this. I'm going to leave this level in there since it seemed to kind of continue to show some pivot level type action. But the real story is these two last candles right here. This is a really knife-edged inside day. A lot of coiling usually comes out of these things. When you have an inside day, you have market action starting to coil, and pay very close attention to the direction from which it comes out. Both the SPYs and the diamonds both had a very tight range inside day. However, what's interesting is we were once being led by the IWM, the Russell 2000. Let me zoom back out a little bit here. This looks nothing like what we've got going on in our other markets, and so the election out of the gate with two strong thrusts here was the Russell 2000, but a lot of sideways chopping and consolidation. At one point, it could have been a flag to move higher, but now we're coming back to test this level, which of course is this previous high. The pivot levels are really showing themselves here in the IWM. If the IWM breaks down through that level, it could become a drag on the general market, because on the flip side, what was 3 weeks ago lagging is now leading. We did not have an inside day in the technology Qs. We had a new high in the Qs. So, it's kind of a rotation of the indexes, so to speak. Again, IWM was leading the way 3 weeks ago, but is now looking kind of sluggish, and now we've got the NASDAQ leading the way. But the Dow and the S&P both had an inside day. And once again, an inside day. You can see if you look at the 15-minute chart here, here's our range on last Friday, and then the range today was a very tight range. So I'll let Jamie talk a little bit more about inside days and what his thoughts are on those when he gets the mic back. But that is something to notice, especially if we see another inside day. 2 in a row would start to mean, hey, we're starting to really coil up here and pay attention, to the possible direction. But for the most part, the bulls are still having it. The Qs made a wonderful new high today. The shorts that I've been setting in my alerts not still working, so those are kind of failing as well. Still seems to be a buyer's market. Of course, that 2,000 level is just about as obvious as you could make it. Using the diamonds here, that orange level is basically 2,000. So you can see how even skipping the glass ceiling here, and at some point, I'm sure it's going to be a test. And there's a couple of possibilities through it, and then a nice reversal. That is always a possibility at new highs. So I just want to keep that in people's mind, that just because so that's what we.
Not there. It's kind of like one of these little GIF Emmys that gets passed around. Penguins just walk, and all of a sudden he steps on the ice and disappears. Right. So we won't know until the time comes, but we've all got front row seats. So an inside day. Well, I'll share a bit more of my thoughts with everybody on what do we expect from an inside day. Well, as most of you who were sitting in the chair all day today, opportunity was there, as it always is, but it didn't stick around for long. We'll also see this mimicked in the P&L tracking from Holly when we take a look at that graph. But exactly what Holly spit out today is exactly what one would typically expect from an inside day. It was a risk-off day. There were a couple of trade arounds in GOL and PAAS, but the fact that she only spit out 7 trades, not a big surprise. Not a lot of volatility. When we get to these inside days, typically the action is a lot less than normal. So let's go ahead and talk about Holly. It's not going to be an in-depth discussion because we will analyze what she offered up today, which was some quality plays, but just not high on the frequency. When we get done with Holly, Steve's got some really interesting material to share with you guys today about, well, hold on one second, I'm jumping ahead of myself. On a thin day like today, that is the inside day, as I said earlier, there is opportunity. A lot of the time, finding simpler than one would believe, and I'm going to get into that example with a simple top list and checking out the high volume candidates. that were close to the tops of the range after stocks there, because on a day like today where we had a little bit of downside action as well, these stocks continued to go up pretty much all day. And then, time permitting, we'll see Mr. Steve's content that he's prepared about sector ETFs and how to monitor them, keep your fingers on the pulse of the market, figure out, once again, what has the most potential to the upside or the downside. All right, bear with me 1 second here. Now, this is the top list that I was referencing earlier. I'll probably just show it to you in real time so we can click on some of these symbols. But if everybody notices the time slice that we're looking at on the volume radar top list, it's just the second third. It's after the first 30 minutes has come, so we're looking basically between 10 and 10:04, 59 Eastern Time, or 10 to 10:05 Eastern Time, 7 to 7:05 Pacific Standard Time.
Which I might add is usually it's a good time to pick for examples, because that's when a lot of the 10 o'clock East Coast data starts to come out. So the market can flop around for 30 minutes, and then at the top of the hour, many times that can be the direction attempt based on a lot of economic data that does come out. So that's a good time frame to sample.
Right, and just about, assuming everybody's looking at some type of pattern, whether it be a simple range break or something a little bit more complex, or one of the other gazillion types of patterns that people like to play, we always have to give the pattern a little bit of time to develop. Yeah, you can try to play a 1, 2, 3 minute opening range breakout, but we all know what the volatility is like, and the beast that is the market has a lot of digestion that has to occur in the first 30 minutes. So a lot of the orders that are getting done in the first couple of minutes, we don't really know why a lot of that trading is happening. Could be a litany of reasons. But the bottom line is, the longer we give the market time to produce some patterns for us, the easier it is for us humans sitting here to identify patterns. Holly's a little bit different. So let's do this. Let's get right into the Holly trades today. As we can see, not a big list of strategies that made the cut for today's trading. We can see all of them right here. I'll just kind of sort by the number of trades that were issued. So we had 8 strategies, 6 longs, 2 shorts. Only 3 of these guys fired today. These guys, that specific criteria was never met on any of these strategies, thus the 0 trade count. So, a grand total of 7 trades, which we can see down here. 5 longs and 2 shorts. So, what I was saying earlier, there were cookies being passed around, but if you didn't take your fill on the first pass, opportunity after that was not that great. Risk off, simply meaning that Holly's obeying all of her rules on her exit criteria and exercising her judgment on whether to get out or stay in as well on the profit save or reduce risk functionality as well. So what we have after everything was said and done, about 30 cents gleaned on the 7 trades. Nothing to write home about. However, as those of you who attend on a regular basis know, there's a lot of today I can't use the term a whole lot of opportunity or the phrase, but there was some additional opportunity if we know what to look for, and we'll get into that in just a second. But we can see here, just straight from the graph, on risk off, Holly did get up to right about 80 cents, but after all the things were said and done, the reasons that she got out, only 30 cents was booked on that handful of trades. If we're holding into the close today, we can see that slightly down on the risk on P&L. And of course, we can see that there was opportunity on the risk for taking a little bit more risk, a little bit more than the 80 cents, but not surprising to see these charts look very similar on the peak, but there just wasn't a whole lot of specific criteria being met with Holly today. Now, a lot of the times, there's what we call risk on money to be had when after everything's said and done, the risk on profit is greater than risk off, which we don't see that happening today. The market on these inside days reminds me very much of an accordion, okay? It's shrinking and expanding, but it's not really expanding and staying there, and it's not really shrinking and staying there. It's just kind of mishmashing back and forth, which it's very interesting today because we can see on the longs, which, by the way, here was the long call on GKOS. So we can see. So, you know, cookies were there once again on the long side, and Holly executing on her profit save or profit target or timed hold, you know, was booking some money there. But if we attempted to get more out of it, it comes back, accordion gets pushed back in a little bit. So very interesting today because the longs, she's saving you money with the risk off, and a lot of the times we can approach going risk on a trade-by-trade basis, but none of them panned out today because of just the lack of pressure to take the market higher. But the interesting things to point out today are what we call the trade arounds, and those two just happen to be short trades today. Both of these were issued by Bond Shorty. We had PAAS and GOL. So the thing to key off of here is that Holly, risk off, small loser of 3 cents, but on the risk on, there was a little bit of meat left on that bone there. So if we pull up GOL, of course, this is one of the more stocks. If you were trying to get a couple hundred shares, probably didn't have any problems getting filled. But as we can see, kind of a spotty chart here, but always a few thousand shares or 1,500 shares trading per 5-minute period. But we'll get into PAAS in a minute, a little bit more liquid, but it's really just the chart pattern. Because when Holly gets short here, and then shortly thereafter we see Holly in the red, right? Which is always a good indicator to just set a price limit alert for what we term the second excursion. Whether you participated with her in this initial one, or whether you're just noticing, hey, I saw Holly initiate a trade, she was briefly green on it, trade, and it's turned red. So all we do is so that we're alerted when that second excursion occurs. I've just drawn a straight line, but it's real easy just to right-click and create that price alert from within the chart. That way, on the second excursion, you're made aware of it, and we can see here, first excursion, pop back above. However, Holly gets out using her reduced risk. Now the stop loss on this thing, of course I'll have to expand my chart. The stop loss was way up here, 1692. So never really came close to the stop loss, out of the money a little bit here. But as we always like to point out, the statistical probability from any trade that Holly spits out is for the day. Sometimes they go on the first occurrence. Other times they dance around a little bit around that price, and sometimes they have 2 or 3 penetrations through that price level. We can see on the second time here it actually got some traction, and we were presented with an opportunity to take profits in that thing. So, you know, trade arounds are simple. You see Holly in a red position, you just go set that price alert for the entry price, see what happens on the second or third excursion. Same exact thing in the PAAS here. Let's see where that stop loss was, and once again, we can barely make out the stop loss up there, so I'll just go ahead and expand a little bit. So we can see Holly calls the short here. Once again, on the PAAS, reduced risk, never comes close to the stop loss, but as we can see, it takes that excursion up top, kind of mills around, you know, right here, which once again, kind of what we like to see approaching the entry point again. And then on that second excursion, we get a nice little move down. Once again, not that much, but on a day like today, where the pickings are slim, we want to try to take everything that we can. within reason. So as far as Holly goes today, nothing to write home about. These results that were generated by her with today's market. And once again, let's just take another look at the SPY and point out what we mean in an inside day. And we can simply see that the range today was inside of the previous day's candle. So whenever, of course, when this day is happening, one will look and go, okay, are we going to stay inside? Maybe we'll make an excursion later on, but today, no excursion to the outer extremes of the prior day were made, and it was, let's say it was absolutely predictable, but when you looked at the market activity and the volume levels in certain things, wasn't too far off base in making that assumption. So having said that and kind of reiterating that on an inside day, it's going to be a little bit harder than normal to find the high quality plays that we're looking for, which I always like to go back to basics. And those of you who have heard me speak before, maybe had a training session from me, I'm a big believer in simplicity, especially when we're interacting with the markets, because there's so much out there to confuse and to take away from the basics. Just like any sports figure, any athlete, any musician, you've got to learn the basics first, and if you don't have a good understanding of the fundamentals, it's going to be really hard to take your game to the next level. So having said that, let me just pull my sheet back up here 1 second here, make sure I'm not skipping over anything, and we're going to talk about this top list here. And this is applicable in any trading environment and in any trading day, but today's a good example because of the lack of movers today, especially when we take into consideration the action for today. So here we have the SPY opening lower, a nice little pop up to these top areas here, and then just kind of a, the old seesaw with a tendency to the downside, right? So the interesting thing, what you're going to see here when we start examining these stocks is that starting here, going all the way down to here, which would have been the top of this list at this time, 30 minutes into the open, we're going to notice some interesting things. So let's just get right into it. Kind of make a little bit more room here. We are on the right time. So on a day like today, where it's just kind of a draggy downside day, once we started peeling off from these levels here, well, the trick here is just to sort this volume radar by stocks that are at or close to their high after the first 30 minutes, and then checking out the volume metrics, and of course, once again, if it's exhibiting the patterns that you like to see. What we're going to notice here is that even on a day like today, a lot of these stocks just had significant upside pull or upside draw, right? So keeping in mind that we're looking about 30 minutes in, here's the 30-minute in bar right here, so we'll just do a little horizontal action here. So after the first 30 minutes, the stock's up or around its high, and if we see these volume levels right here, that tells us something, all right? Relative volume at that point in time on pace to finish 17 times normal. And once again, in any of these columns here, whether it's the 1, 5, or 10-minute volume levels, a value of 100 is always normal. So 100 is normal volume. So when we're looking for these candidates and we see ETRM kind of doing this little sideways dance here, whether we go, okay, well, I like this. If it continues to hold these lines right here, and we could easily draw some lines around those wicks to try to get a good estimate of what stop loss might be, we can see that this guy had plenty more upside potential left. All right, so that's just the first one here. So what I'm going to do here is just kind of click through here, and I think we're going to notice a lot of the same thing. CTIC, a stock that doesn't typically do a whole lot of volume. If we start looking at these volume bars, 100, 124, 120, hey, a stock typically doing 120,000 shares. I'm not afraid of that. I'm not looking to do huge volume, so whether I take my 500 or 1,000 shares, not going to be a big deal. Now, the key is today. What did it finish volume-wise today? Looks like about a little over 2 million shares were traded today. So the fact that it has light volume in the previous days, kind of insignificant when it busts out a 2 million share day today. Now, this doesn't get any prettier in my opinion. All right, so let's see here. And of course, as we all know, if we're trying to monitor volume and go, okay, I see high relative volume. That's all fine and good. We all know relative volume is slow to update. So if we were just randomly scrolling through charts and we stumbled across this one today and we look down here, is anything going to jump out at us? I don't know. Whether it's our charts or anybody else's charts, I've just never found a lot of value in looking at these bars because they're always kind of after the fact. Now, first and foremost, being alerted to this guy 30 minutes into the open, which is right here, I mean, wow. High volume, it's put in this little top here, and then you're like, okay, I'm going to watch this one, and then we get this beautiful little consolidation period. And here's what I like a whole lot is once it breaks that plane, and of course, different people will have treated this differently. When I see something like this with this tight little range, I love these things because consolidation, NR7, micro consolidation, whatever you want to call it, what this tells me is that buyers and sellers are equal. We had a gap up and a slight push up, so that tells me there might be a buyer in this stock. But when I see this pattern present itself, even better, because all we have to do is draw a line and wait for the new high. And a picture speaks 1,000 words. CTIC, a nice little break, and just off to the races on massive volume. And by the way, Steve, anything you want to chime in? By all means.
No, you're doing a good job. I'm answering a few questions over here on the side as well. So
sure.
So let me know when you're ready.
And once again, we've got massive volume coming through these guys. Do they all work? No. But on the ones that didn't really continue, they didn't really peel off a whole lot either. So on a day like today, you're going to notice that there was a lot of opportunity to the upside in these stocks that happened to finish that first 30-minute period with massive volume behind them. MXL, another great example. Not near as pretty as CTIC, but nonetheless, 30 minutes in, about right here, you're wondering to yourself, well, does it have any more juice in it? And the answer was quite clear, because on days like today, things like this stand out a lot more than a day where you might call it normal, right? Because there's a lot of those opportunities. Triple D, everybody knows about 3D systems. Another one of these where, looking at the first 30 minutes and then a nice little flattening out right here, and then if we draw a line straight across. So what I'm showing you here today isn't, it's not real complex. But on a day where the market was consistently being drugged down, what do? Just like any day, we go back to the basics. If it's a pattern continuation that you're trying to play, doesn't it make sense that you want to have as high a volume as possible in order for that thing to actually do what you might think it's going to do? And this kind of brings up a topic that I share with a lot of people in the one-on-one training sessions. Catching knives off the bottom, trying to fade stocks off the top, it looks very, very, very attractive in hindsight. It also backtests very, very well. But I think we all know, those of us who have tried that technique, unless unless you're really proficient at it, it's not that easy of a technique. Now, when we talk about pattern continuation, we see the pattern. We tell ourselves, okay, if the conditions are right, this thing should continue. But really, what's the most important thing when you see that pattern and you're wondering to yourself, okay, is it going to continue? Well, is the volume there? Now, the volume, typically, if you're just trying, let's use this example. GE is a stock that everybody knows. Typically trades right around 1 million shares a day on average, give or take a little bit. Now, let's pretend for a moment that the market is not opened, and the guys at the trading desk, hey, is there any institutional volume in GE today? Do we have any big buy orders? Do we have any big sell orders? Answer is no. Okay. Well, in today's modern era, and back when Steve and I first started trading, market makers were still pretty much in abundance. And you might be interacting electronically with a stock, but that didn't mean there wasn't a human on the other side of the fence going, okay, this is happening, controlling the show. So if the market opens, there's no institutional buyers on GE, the chances are they're going to turn loose a certain algorithm to quote-unquote make the market in that stock for the day. Now, you go try to trade a pattern against that algorithm, I would wish you good luck, because that algorithm is designed for one purpose only, to take your lunch money. When you try to trade this little pattern, it's going to counter you, and you have to realize, do I really want to do battle against that algorithm? This algorithm that the big boys spend millions of dollars a month on, making sure that it's the best at what it does. Now, let's look at the other scenario. GE's got huge institutional buyer in it this morning. So guess what? They actually have to put a market maker in the chair, and he has to interact with the stock like what a market maker does. Now, whether you are a glass half empty person or a glass half full, once you kind of work it around the old noodle, it kind of comes back to the same conclusion. If you really have huge volume in a stock, we could say that there's less manipulation. Or we could also say the move is going to be truer, right? In both cases, you'd probably be right, because the human is predictable. The price action is more predictable when the volume is flowing like a raging river. If you fall in the river, whoosh, you're done. See, that's the takeaway. The move is more predictable. There's also a human in there. It makes sense on several different levels. So, a lot of people talk about how price is the ultimate judge, right? All that matters is price, but most of the time, there's going to be volume associated with the price move. So once again, it's looking at things from a very simple perspective, but when you think about it, and there's over 8,000 securities to trade on any given day, when it comes to the pattern that you're trading and the conditions that need to be met for a chance of that thing doing what you're going to, that thing doing what you think it's going to do, that's better than a coin flip, you better have a little bit of volume in there as well. So that's what I have to say about volume, and
It's like Forrest Gump. That's all I've got to say about that.
that is, and I hate to sound too simplistic, but if you start watching for these types of plays and verifying that the volume is there, and I'm not talking about a stock that trades 1 million a day that's going to trade 1.2 million shares a day. I'm talking about stocks that are going to trade 50, 100%, 200, 300% more. That's where you want to be looking. And yes, just like Forrest Gump said, that's about all I have to say on that topic.
That's right. All right. Well, let's talk about how to build a couple of really simple alerts. I'm going to go back to basics here, but the content of these basic alerts that we're going to build are of value. So I'll go ahead and take control back here from Jamie and grab my screen here. There we go. All right, welcome back to my screen, everybody. First things first, this is going to involve a watch list, because what I'm doing here is I'm using ETFs to build a kind of a helicopter pullback view on the market that we can see in real time and see the different layers of strength and weaknesses and where the money's flowing in and where the money's flowing out, and then show you two different ways, to basically put something like this together. It's very simple. So to start with, if you will, in the chat window on the GoToMeeting toolbar, I've dropped in, I don't know how many that is, 23, 24, some odd symbols. These are all ETFs, and let me just highlight them here. Let me close that window down, and I'm going to go through them in both fashions so you can do. So those of you that know trade ideas know that if you have an alert window and a window, we need to have two things. We need to have an event and or filters. In this case, we don't really need any filters because we're just doing a high-low, but we'll come back to that. This one is a top list. We're using the same list of ETFs, but we're organizing them more in like a spreadsheet type fashion. What we could do is we could come here and double click and say, all right, these are our ETFs. Let's sort by relative volume. Well, GDXJ has got some really nice volume, but the ideal way to sort these is going to be change from the close. So it's just a double click to put them up top, or you can invert them like that, or use the scroll bars if you need to, or bring it down even more. But what I want to do is remind you guys again, copy and paste the symbols that I have in that chat window. If you don't want to copy and paste, write them down, because what I want to do is I want to go through them individually real quick, and I want to give you a definition. And it's really up to you guys to kind of, know the players in the program and know what these different ETFs mean and what the significance of them are for a basket of stocks. So here we go. Let's take a couple minutes and just look through here. GDXJ is your junior gold miners. So basically your gold miners, but the smaller cap guys, all right? This is going to be a little bit more of a volatile sector because they're smaller cap, but that's what that is. IBB, this is going to be your biotech index, very popular ETF for biotechs. SMH, semiconductors. This is your semiconductor holders. They're going to monitor your AMATs and Intels and AMDs. GLD is basically your gold ETF, tracking the price of gold in ETF pricing. TLT is the treasuries. I believe it's the 20-year. But when you hear them talking about treasuries, you can pull up a chart of TLT and see what they're talking about. XLV is healthcare. All right. SLV is silver. QQQ, we all know. Index GDX is our major gold miner ETF. So the miners, the junior miners, were doing better today than the major miners. Interesting. XRT, this is a retail ETF. FXI, China ETF. So if the China stocks are hot on any given day, you're going to see FXI near the top. XLK is your technology ETF. SPY, we know that. Diamonds, we know that. The Dow. XHB, these are your home builders, your Lennar, your Toll Brothers, things like that. OIR, this is going to be more retail, more REITs and real estate, commercial real estate type stuff. IWM is the Russell 2000, we know that. XLF, this is going to be your financial sector, which is kind of an all-encompassing blanket sector. IYT is your transports. And then KBE and KRE are kind of out of XLF. KBE is your bank index. And then just like the gold, I'm sorry, not like the gold miners, but we have it broken down also into regionals. So KRE is your regional banks. So we've got actually two ETFs for banks as well as the XLF for the financials as a whole. Getting towards the bottom, the OIHs, these are the oil service sectors. XLE is your energy sector. USO is going to be your oil futures, your oil commodity. And then UNG is going to be your natural gas commodity. So real quickly, I wanted to go through those and define them so you guys know what's what. You should learn these just like anything else you can learn. Now, again, I've dropped the symbol list into the chat window if you expand that chat window. Well, let's back up one step. How did I make that symbol list? Well, basically Tools, Symbol List. I'm calling this my ETF, and there's 25 of them in there. So I want to edit that list. I can always go back and edit, but this is basically where I got those. So once we've established that we have a symbol list and we have a name for it, we're good to go on the configuration. So rather than just deal these out here the simple way, I just want to show you guys how easy it is to build something. All right, so we'll do an alert window first, and as you can see, we actually have two alerts. There's nothing that prevents you. Let's start from scratch. There's nothing that prevents you from using both a new high and a new low in the same alert. You could have a new high with running up. There's no limit to the amount of events that you can put in for satisfying the event portion of what we're doing here. Now, all we're trying to do is find out what ETFs go into high and low. And these are ETFs, these are not stocks. So essentially, guys, there is no filtering to be done. That would just screw us up. So this is a blank filter. And then what we're doing is we are deselecting the U.S. market, and we're going to symbol list. We're going to use symbol list, and we're going to highlight ETF. All right, there's my symbol list right there. I have overwritten the U.S. stock exchanges, the 4 major U.S. equities exchanges, and we're only going to point towards those 25 symbols on our list. So it's that simple. Symbol list, ETF, or whatever you're going to call it. And for the alerts, new high, new low, if we go ahead and click OK, this is what we come up with. Now, you can see that I've condensed mine down a little bit. This is something that you really don't need a lot of information. The alerts today, this is the history. Well, we went out. XLV was going out strong at the end of the day, but GDX was also hitting lows at the end of the day. So we really don't need to see much more than the directional arrow and the ETF that's being used. So what I can do is I can go into configure, I can go into columns, I can take out the type, I can tape out the description, and then all that's really left is time and symbol. And so I think I want to keep type in there. Yeah, we want to keep type, and we're going to take out time. We don't necessarily need time. We can see it's chronologically ordered. So this is as simple, really, as it gets right there for building yourself. If you want to take the time out, like I said, you can. I thought I took it out. Let's try that again. Go to columns, time, remove time, symbol. Okay, and there's a really nice condensed version. Now, how would this work? I'm just going to go ahead and close that because this is the history of the same thing that we just built. So watching this in conjunction with our top list kind of gives us two different looks. As we know throughout the day, GDX has been strong, but as we kind of went into the end of the day, GDX, the major GDX, was falling. So this gives us more of a real-time look as to which ones are on the move, on the upside or on the downside, and then the top list gives us the bigger picture as to where the different sectors are layered. So to build this top list, and I'm doing this slowly because I know there's a lot of people watching on the YouTube channel that should be able to follow right along using the same list. You should be copying these lists down. You should be making a symbols list of your ETFs, and once you've got that, let's go now and build top list. So it looks like this. So the top list does not require highs or new lows. In this case, it really doesn't require anything. So let's start from scratch and clean out everything so we've got nothing in there. And again, the only thing we really need to do is change this from our exchanges over to our symbol list, which we call ETF. And there are a couple of columns that we do want to see, even though we're not filtering for anything. There's a couple of columns we want to see, so we'll go over to our column here. The first thing we're looking for is change from the close. So currently, all we have is symbol in there. We've got to look for change from the close. And there it is, change from the close. It's also nice to see kind of what's going on in the last 30 minutes or the change in the last 5 minutes. So we've got 30-minute change, 30-minute. Where is that? Here we go, 30-minute range. That's a dollar value. I don't want that one. We want 30-minute change. Don't think that's it either. Where is it? Where'd you go? Well, let's go find it. So we do 30-minute change. Change in 30-minute. Here's our percentage. Let's add that column, show that column. Okay. And then the final column we want to see is relative volume. Relative volume is, again, let's just make it simple on ourselves. Relative volume right there, show column, and here is our 3 columns plus our symbol. So ideally, if we launch it, it should look just like that. And it does. So no filtering. We're just showing a couple columns that we want to keep tabs on. And this gives us, if we change from the close, this is how our market's closed today. So this is a very simple top list that you guys can build using the simple ETFs that we've got here. If you'll notice, I have not included the VXX. I have not included doubles or triples or any inverted ETFs. These I don't really just want to know where the money's flowing. Today the money finished up in semis, biotechs, and junior gold miners, and money finished out of USO. If you want to look at USO, you can just double click it and see midday this had a big spike, and I saw this thing coming through here. It was just one after another of red, so you could just see USO was just getting pounded. So here again was a nice example of how to build 2 very simple alerts. Alert and one top list gives us a really good helicopter view of what's strong, but then this alert will give us an idea of what's a critical thing to have, because it's a piece of the puzzle that Jamie talks about. There's many pieces of the puzzle when you're trading, and knowing who the players are and the sectors are and what direction they're moving can really help you sometimes if you've been stocking a certain stock that you know to be a gold miner or maybe an energy stock. It does really help to know what the bigger picture is. So,
Steve, what I really like about those windows is how small and how efficient they are, because I've seen guys take up several monitors with sector chart trying to accomplish the same thing, where you can get the exact same functionality with these 2 small windows and really get it in a much more efficient method.
Yep, and again, bigger picture and more what's happening minute by minute, tick by tick on the smaller one. And it does, you don't have to use a lot of columns to get the information you need, just something simple, right? So, we spent a lot of time on that. Hopefully that sunk in. Again, step 1 for those of you at home, but this is a very easy way to put together a kind of a heartbeat of the market and where the money's flowing in real time. So hopefully where we're going next. Anything?
I believe, let me double check here, but I believe we're pretty much towards the end here. And of course, if I can find my mouse, we'll verify that. Yeah, we got about 9 minutes left. I know Scott wanted to share the new discount codes with everybody. So, Steve, unless you have anything else to bring up, I think it might be a good time to bring Mr. Scott in. Or if Scott's not there, we could always talk about a few potential maybe setups moving forward, which brings up a good topic, because typically Steve and I like to share some price alerts with everybody for stocks that may do good things in the future. It's just keeping with the temperature of the current market today. There's just not a lot of setups out there, and of course we don't just like to churn out the technical aspect only. We typically like to have a few more extra spices on the setups. Like high short flow out there. Not yet anyway. The trend change lubricant list has been pretty sparsely populated. And are we back on my screen, Steve?
Yep, we should be back on seeing your screen right now.
Yeah, so I'll just give everybody a quick peek at the trend change list. You know, we've seen those, and the charts just aren't looking very conducive. And the ones that are,
Andy talked about that as a January effect trade, and it popped up and pulled back. And you see how it's got that little cup and handle down there? Zoom back in. It's got a nice look to it right there, the way it's holding up. So if you got some price alerts functionality, that's one to keep an eye on, because Juno does have a short float as well. I'm not sure what it is off the top of my head. It's covered up, but that could be something of interest to watch if you're looking to mark up something. I did find that kind of popped out at me.
Let's see, I thought I had short float on this list here. Okay, let's just go ahead and add that just to see what the short float is on Juno real quick here. How that got away, I do not know. All right. So short float, 21.84%. Sound about right for Juno?
Yeah, that sounds about right.
Right. And of course, CYH, not looking too shabby either, with a 24% short float. But just like with most plays today, no doubt in my mind that we don't know if we're going to go up or down, but certain macro situations probably will either keep the market really boring, or we might have a couple of events pop in there to cause some volatility. Unknown at this point, but we've all got front row seats.
Real quickly, yes, but this will be the last question we take. Can you elaborate on short float? Yes. Let's say a stock only issued 30 million shares, and 30 million shares are in circulation. That's the size of the float, 30 million. But when you hear somebody say, well, there's 40% short the float, well, 40% of 30 million is a significant chunk of a small pool of shares available. And when the short sellers are wrong, they can be picked on by the market, what's called a short squeeze. If the price is higher, the shorts have no other way to cover their losses but to buy stock back with both hands. And of course, they're competing with people who want to go long, buying the stock back with both hands. So once the market realizes that the shorts are in trouble, it becomes kind of a schoolyard pick on the shorts, as we call a short squeeze. And so the higher the short float, in my book, anything above 20% is very high, and those types of squeezes can work on stocks that might have, a float of under 60 or 50 million. Those can start to be significant events, but they don't just pop up out of the blue to come, through a certain level, a certain chart point where it realizes, looking at the chart, yeah, we're screwed. This cyclical chart is no longer in favor of the shorts. We probably should cover, which means buy to cover, and that's why the higher the short float, the more indication that there could be a catalyst of an explosion of a perfect storm of buying. So that's the quick synopsis on why short float matters. Anything above 20% is interesting.
Scott, you ready, buddy?
Yeah, hopefully I don't break up too much. I've been getting some intermittent volume drops, but no one's been complaining about it in the chat, so I think it's just my connection here. Yeah, so as a way to thank everyone, we have a promotional code that will let you join us and save a decent amount. So when you go to tradeideas.com/price and use the code Holly2Trade, all caps with the number 2, like you should be able to see on your screen, that'll save you
Yeah,
15% off
Scott,
first month or year of premium.
There you go.
Or 10% off your first month or year of standard. Now, the primary difference between standard and premium is access to, the premium areas like Holly, the AI, as well as our event-based backtesting module, the odds maker. Other premium features that are very popular, like our shareable price alerts, is probably second to Holly, the biggest feature we added last year. We also have premium windows like the red bar ignore and green bar ignore windows. And Barry sometimes demonstrates those in the trading room, and the trading room is something y'all should also be going to every day. But another important thing about our subscriptions is both standard and premium include a full hour of one-on-one training. As soon as you sign up, just go directly to the support section, click on the training link, and there's a nice little calendar interface for you to choose the best time and date that works for you. And you can even choose whether you want to be trained by Jamie, Steve, or Andy, or any of the above. So you can download this as well as our contact information slides by clicking on the little handouts section of your GoToWebinar interface. There's a little plus next to where it says handouts, and there's a little 2-page PDF you can download with this information on it as well as our contact info. And the best place to ask questions is info@trade-ideas.com. That is our support email, and that gets routed to the most appropriate team member. You can also reach out to Jamie or Steve directly with the emails you see on your screen there with jhodge@TradeIdeas or steve@TradeIdeas. The phone number is great to call during regular business hours on the West Coast for any subscription or billing questions. You can follow Steve Gomez on Twitter @TodayTrader or follow Jamie Hodge @QuantBot. Those are their Twitter handles. Dan Merkin, our CEO, is TradeIdeas1. We also have Trade Ideas without the one and some other accounts. You can follow us and then find those too. Facebook.com/TradeIdeasPro is where to find us on Facebook. Like that page because we, as long as you're using Facebook and you got that on your feed, we occasionally post some unique content there. So that would be nice for you to have popping up and percolating in your social media feeds as well, in addition to our Twitter handles and your Twitter feeds. So thanks everyone for showing up for the first office hours of the year. We'll have another one next week. Our webinar schedule this week is a little different. We have no Trade of the Week webinar tomorrow. Instead, we have a friend, Hit and Run Candlesticks, is having a webinar, and I think you've been getting invites to that, so if you can attend that. Then on Wednesday, we have no QA webinar, but on Thursday, we return for our trading studio hosted by Andy Lindloff, and I think Jamie is flying wingman for that. And then the following week should be back to regular schedule, although I think we might have a guest webinar in the middle of the week. I'll give you guys an update on that as I firm that up. Thanks all. There'll be a recording of this up tomorrow. Thank you, Jamie and Steve. And
thank you.
Thanks, everybody. Happy trading.
Yeah, y'all have a good afternoon. Enjoy the rest of your day.
Bye-bye.